Okay, here we go. Now we are looking at NEO. And we're using the correlation trend indicator with some moving averages. Looks like moving average, 2 lines, and this DMI stochastic extreme, which we can get rid of. Now, if we use just our moving averages, which this is the setup that comes with Thinkorswim, we can see where the price dips on a daily, frame here. Looks like hourly. And we can see where the best time to buy on our trend indicator is. And that right now would not be the best time to buy, as these are about to cross over each other. But when they started crossing here, I would have bought this hammer right here. And, recognizing your candlestick charts, you would have known that is a hammer, or actually the hammer's right there. And then, of course, there's many others, but either way, so you're looking for these crossovers. But we look for a dip in the trend. So when the trend dips and then starts to recover, say above a certain percentage, let's say once it recovered above 0%, I like doing 0%. And when it did for 0%, it actually crossed right here and took over into positive price action. But I like to buy the pullbacks or these bottom bubbles where the large volume is. That's where you're going to see, a lot of your big buying happening at, these long drawn out wicks. So here we go. Here's where, it took off. Right here would have been a perfect example of the moving averages of when to get in because it took off. You would have seen back here that it was starting to, but this all happened after hours. So let's take a look at, some other sets here. But with our trend indicator, let's go with a shaft trend indicator. Holler when you see it. It's got to be here. Trend cycle. Sorry. Okay. Alright, here we go. Now we can see it's a little bit more smoothed out. And once again, we're using a trend indicator. Now, I'm big on trends and moving averages, and that's because that's what everyone else uses too. Except you're not going to be using these indicators. You'll be using moving averages, and they're going to point you towards the MACD and those other to go to indicators right off. And you're going to learn, and you're going to burn your money, and you're going to be upset and wonder why you learned this stuff and it didn't quite work. I allowed that to happen to me for about less than a week. I traded for 2 days, and on the third day said, what is it that is so different about my trading style to the people who are winning and making good trades trading style? And the difference is a lot of things. So honing your own trading style is going to help deciding whether you want to trade by trend alongside of volume and moving averages. Maybe even throw a little VWAP in there. That way but you're not necessarily going to need VWAP when you can spot dips in the trend. VWAP will show you those, and that's when institutionals will come in and buy, and you'll see them with big, high, large volume. So you don't necessarily need that. But this is a very, very good, simple setup. And right now I have it on a 15-minute, 5-day 15-minute, and I actually like the 5-day 1 hour chart, giving 1 hour candles, and it gives it a bit of a clearer signal here. You know, here's your real bottom down here on Monday where you would have wanted to get in, and then it started to rise up. It got above zero. That was a great confirmation. And you would have got in here, you would have lost a little bit of money and it would have scared you, but looking at your moving averages, you would have known to stay in. And then as long as your moving averages didn't cross back over each other, that would have been your reason to stay in. Okay. Now, you know, using other indicators, you could have been scared out of these trades, but actually, right here on Tuesday would have been another great time to buy, being that they didn't cross each other. But it dipped, so it gave you that opportunity. Looked like it happened during after hours. And then during hours, it even gave you another buying opportunity here in NEO. And that was on Tuesday. On Wednesday, it gave you another buying opportunity here. And then here for the after hours people, and then here for the regular day trading people. Right here, this little red doji was this red doji was, you know, your buy, and then this was your recovery, that red doji, and then this was your confirmation to get back in at 39.50, and you could be riding it all the way up. So here's a little red doji here, and it looks like price could continue to move up on NEO. So we could watch this closely, and yeah, but you know, design your own candlestick charts. So that's what I'm doing. I'm coming in and designing, you know, a 5-day 1 hour candlestick chart, and then I do a 5-day 15-minute candlestick chart, and you can see the dips on 15-minute cycles. And you can see they're a little bit more frequent, a little bit more buying opportunities, selling opportunities intraday on a 15-minute chart. You can see here, of course, and here. But either way, you know, using these trend cycles will help you find the best times to buy. And if you would buy when both of these are dipping at 37.71, you could sell at 38.22 for a nice profit. And just pay attention to every time they both dip, 33.27, and then they go up to 35.09. You could design a very, very nice Thinkorswim script off of just these two indicators and some moving averages. And if you, you know, so we're going to work on that. You know, we're going to talk about winning. And yeah, you know, so we want to design things that are good for different time frames, something that we can sick the dogs on it on a 15-minute time frame, an hour time frame, and you're not going to find a one code does all in most studies. So, you know, and if we were to even throw in another stochastic, a slow stochastic, a fast stochastic, or even, say, inertia, or let's see here, let's go with something like something easy to read. By easy to read, I mean like up and down. This Q stick here, I believe was a interesting read here. You know, when it goes above the line, it's in positive price action. When it goes below the line, it's in negative price action. So you would really buy when it's above and sell when it's below, but wasn't really impressed with the information that one gave me. I had something in mind. Let's see here. This SVE stochastic. Simple moving averages. Of course, we can add those and use as many of those as we want. We can do a full stochastic or a fast stochastic. Let's add a full stochastic. Okay. Now we can see, you know, when the fast line crosses the slow line, you're in positive price action, and if it's above, say this 50% line, you're in positive price action. So, yeah, your signals are a little choppy here with this one, but overall, readable. Not every indicator will apply to every stock. I like using this Chand momentum oscillator. It also goes well with the Arun oscillator and the Arun indicator. Those three together are one of my favorite setups, along with using 3 Arun or 3 oscillator setups, almost setting it up as a MTF or multi-time frame Arun setup. Wink wink, something that a lot of people out there are looking for. So that's where we'll get to the part of the multi-time frame Arun, and we will get to coding one of those. The idea is that you're taking your Arun study that has 5, 14, and 25, or let's just say a 25 and a 60 or a 90, and then a 300 period, and then you correlate all of those together. Or you can do them closer together for swing or farther apart. It just depends on the stock you're trading and volatility and things like that. But we have some studies that we've been working on. But this Chand momentum oscillator can also be used, and it kind of goes on the prospects of RSI, being overbought and oversold. So when we would cross above 0, we would be going into positive price action, which right here, or if we would have bought the dip in all 3 of these, and as we can see, that dip happened right around here. And as it started to recover above the positive line, as it does so, the moving averages cross over. So this kind of gets the signal a little bit first, and then this one gets it. This one seems to get it last, and then the moving averages, of course, you can see. But you can see once they start to start to wave and cross over each other, that you would buy in. This would be a good confirmation candle right here to buy in on. And then of course you can see it dips here again. As it dips here, on all 3, you would see that was a great time to buy in. So really, you're just looking for the lows and the highs and following them. So it's a game of patience. Never ever have you had to be more patient in your life than dealing with the stock market. So, had we bought this on a Wednesday, we would have waited until possibly Thursday, or but it looks like Thursday late in the day to sell it, and then we would have bought back in, probably somewhere around here as it started to recover. And that's what it looks like. What we'll see is we'll start to see a recovery on the correlation trend indicator, then we'll see the shaft trend cycle, and then the Chand momentum oscillator will show us that, first that things are starting to happen. Things are starting to happen, it's getting more popular, and it shows it here and here, and then the price jumps up here, as it did. So, of course, we can look at, any other stocks, any other time frames, and you're going to see similar things, similar patterns, crossing of your moving averages, dips in your timelines. And these are going to be some of the biggest, secrets, or 3 of the biggest or best hidden indicators out there that people just don't talk about, and it's because they are so very useful. Now your moving averages, they are extremely useful. And why are they useful? Because everyone else uses them. Um, and that's just the way it is. So, you won't find, see, I have another Chende set up. We'll apply that, and it looks like it's using 2 Arunes. So it got the oscillator, the momentum oscillator, and then the Arun indicator. So you can use this, or just the Arun indicator, to be honest. Let's just get rid of this one and get rid of this one. We'll hit apply, hit OK. Oh, looks like we kept the indicator, not the oscillator. But either way, if you were to buy when it jumps up here, and then sell here or even short here, and you'll notice these gray dojis, they're sometimes good hints on what to do. But, as you can see, on a 25 period Arun, right here was a great time to buy in, and you would have stayed in until possibly here. So, but what else can we look at? Let's look at some oats. Look at some futures. Okay, so looks like we've got volume. It's going to show you things like volume, and if we were to deal with futures, we would buy our future right here at the low, and we would want to, tread that all the way down into the crossover, and buy, sell it at the high. Of course, we can follow these as well, but for the most part, and we can use trends for that too, or crossover studies, or I like to do ones where we get to trade by color. That's really, really neat. Oh wow, see all this busy stuff on the screen? What have I done? You can tell I was really playing with some things here. And all of this is just moving averages and stuff for the Thinkorswim, ThinkScript. Okay. And this is another way to, show some, I guess, trend. This HA Colt, if you were to buy, here when it switched over to green at 273, you'd be in the money to 285, 283, and then it drops off to 262, back up to 267. So, I have a trading by color scheme, and of course this inertia, this inertia line helps. Once it gets above 0, you know that you're in a positive price action. And there are many other indicators that can show you that. But as we can see, we drop below the line here, and we start dropping, so that would be considered a short, a short, a short. And as it starts to recover, it starts to recover, we might buy it here, and then, we might even still be in, because it hasn't dropped below the line yet. So really what we're going to do is we're going to set up some of our most favorite see, this momentum percent is a lot like the inertia. And also there's a trading by color that I really like to use a lot. And I like to go by, say, 4 green candles. If there's 4 green candles, buy in. And that seems to do really well. 4 green candles on, each one of them, or say 3 green candles, or, you'll learn to read these indicators particularly, but, the idea is to buy the depth of the red at the low and sell at the high. Go to corn futures. So, And when you see dips in volume, you're going to see things happening. Either people are shorting it or they could be, buying it. We don't know. But, as we start to see the red decrease, red decrease, red decrease, red decrease, red decrease, and this is actual, people kind of still buying, but, but either way, once we see it switch over to green, we know good things are happening. And you'll find interesting ways of trading that just really work for you. That's why there are so many different sets. But if you were looking for, say, a golden crossover, or something that would definitely work, see the P&L here? It works. But overall, you're going to see, many of the most popular trend indicators, and they're not really going to be talked about. And you're also going to find see. You're going to want to use your volume profile to see where people have bought in and shorted from and where you might be able to get a good discount at. But overall, you'll find that your trend and volume indicators are not going to be spoken about very often. And these these thermo trends, they're really, really neat. Take a look at some of these thermo imaging trend following systems. They are incredible. You can really read it just by read the health of the market by color. It's interesting. But I think that you'll find that there are many, many different indicators that could be spoken about and aren't, and that you would have probably seen a good 10 of them that are more useful than any of the ones that are out there, that are regularly being made videos on, and also easier to read, use, and understand. So, take this information for, what it is. Hit the subscribe button. I'm here. Ask me questions. I'm working on coding bots in, a couple different languages, actually. So I've got a GitHub account. We can, collaborate if, you're interested, about doing things like that. I'm always looking for someone to work with. Sometimes it kind of sucks to just sit there and do everything by yourself. But moreover, let's learn to trade. Let's learn to trade the correct way. Let's learn about trading with our trend and following volume, because those are going to be the ways that the lone trader can win. If you're, of course, there are other groups and senses of traders, but the lone trader who works, just trades by himself, collaborates with a few people, they need to learn how to read stock charts and not just rely on an indicator that they paid for, that somebody else set up for them. So I'm gonna say that the Arun indicator and that your correlation and your shaft indicator and that your Chanday Arun oscillator, Arun indicator, and Chanday momentum oscillator, those are going to be big in helping you become a better, more understanding trader. Learn these indicators, learn what they mean, and then you will have formed a very, very good knowledge and skill set for you to be the best trader you could be. There's another moving average and stochastic bot that I built. It's got a good P&L. Makes money. See, and right there, theoretically, I wouldn't have taken some of those trades. So, the idea that, you have to go in and make sure that it does not do that. Okay? I like how when this indicator gets underneath of, you see a positive price action. So, when this one moves under, it really gets under it. And I just designed this one the other day, so I'm going to be working on making a bot for that. And what was that indicator? It is the Ehlers Simple Decycler, I believe. And it's accurate. It's very accurate. Just right out of the box settings, accurate. If you were to use just that on the screen, and did your longs and shorts with it without doing moving averages. I'm not a financial advisor, but I'm pretty sure that I could teach my 13-year-old son to do this, and he would do it just fine. Actually, I am teaching my 13-year-old son to do this, and when he sees this, he's gonna ask, why didn't I show it to him sooner? So, okay. We'll just check out a little something else, and we'll go back on our way. So, but I kind of like this LBR Smart ADX because it shows you, and you could get this kind of put into the pattern as well. But it shows you red, orange, or yellow, and then green. Kind of starting to recover. Green, yellow. Red, yellow, and then this little pivot here, this high and low, which I have it defined to define the high and the low, I believe. But that's the 4% model. That's the one that's working there. Okay. But the information that you can get off of these charts, with particular indicators, and there are indicators that aren't being spoken of, and that's because they want you to pay for it. Or, if you can't learn it yourself, they want you to pay for the understanding of it. But, overall, I like this setup too. It's certainly interesting. What we would look for is that this line here, this LBR 310 oscillator, we would have to set this up with the rest of the LBR stuff, and the Levitt convolution acceleration. Okay, we'll have to learn how to read. Excuse me. We'll have to learn how to read that. Yeah. How interesting. But at nearly a 30-minute video, we can, we'll cut that short. We've looked at Yeah, lots of things today, so. Of course, I don't know what we're necessarily looking at, but interesting enough, isn't it? Alright. So, tune in next time for some more indicators, and, I like to go live on the stock market when I am trading. Point out some of those, good deals as I find them and see them. Can't take them all, but I can point them out. So, until next time, make sure you hit that like button, help other people find me, help me reach other people, and subscribe. That way I know that you want to see more of this stuff.